Hello and welcome to the market update here for Tuesday, May the 30th. If you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com. Also, if there's any audio issues, let me know, any clicking on the audio or anything like that. Make sure you let me know. I can't hear it on my end, and so I rely on you guys to let me know if the audio is bad. I haven't had that problem for a while, but thought I'd just bring it up to remind anyone so you don't, if there is an issue, you don't leave the class, because I can usually dial back in and get rid of it. So anyway, let's get started. Again, holiday weekend. Hope everyone had a good Memorial Day weekend. One thing that I've noticed, it used to be that it was rare to get a day when the market's closed, a holiday when the market's closed, and now there's like at least one a month, it seems like now. I was thinking ahead, and there used to not be one in June, but I think the Juneteenth holiday is now, the market is closed, if I'm not mistaken. I'll have to see if that's the case this year. And then we have the 4th of July, and it's like almost every month now that we deal with a market holiday. But anyway, the big talk right now is obviously the debt ceiling, and we've talked about this a little bit. That we're trying not to overreact to it, because we know it would be a disaster if it doesn't get resolved, for a disaster for the economy and for the markets if it doesn't get resolved. And but I just remember back in, I believe it was 2011 the last time. Was it 2011 last time they had this, where they pushed it right up to the deadline? I just remember that people were dismissing it, and then it got to the point where everyone believed that all hell was going to break loose, and then right at the last minute it got resolved. So they have a set. One thing I was waiting for was, when is there a set date? I mean, we talked about June 1st, and people mentioned June 1st, but as we got closer to June 1st, it was like, okay, is that the exact date that everyone's looking at, or is that around the time that everyone's looking at? Now we know that it's June 5th is the set date, which is next Monday. And with the market started to rally today based off of the news, the headline news, and agreement was made. Biden, but that's not the agreement. It has to be voted on. It has to go through Congress, and so that's that's always the sticky part. And I think that's why the market's kind of reversed today. Is there's rumblings that there's some Republicans not happy with parts of that agreement, and it really has a feel that we're going to move right up into the weekend. And the only other major thing going on this week is the jobs report on Friday. Now, it is a short week, so I mean we're almost to Friday already. But it wouldn't shock me. So I'm looking at a possible jobs report that could be negative, and a possible. And remember, the jobs report, I see it as a no-win situation. If it comes in, if it shows job losses, obviously that's gonna show the economy slowing. It's going to show the higher probability of moving into a recession, or the recession is starting, or could be coming. We should start to see more and more signs of that as we head into the summer. If it comes out really strong, well, then you've got the inflation problem, which means the Fed's gonna continue to hike, and or keep rates high for longer, or what have you. So I can't see that outcome as being bullish. And then you combine that with the debt ceiling, and I could be wrong. They could vote, and it could be all solved before the weekend. But it really has, Washington is known for the dramatic, and and they're going to probably do it over the weekend sometime. And the point I'm trying to make is that I'm looking ahead I looked at the price action today, and we're going to take a look at the chart here in a second. I looked at kind of the momentum indicators, and it really is, again, lining up for a little bit more of a bearish week, or a bearish, a little bit more of a lean. I'm leaning a little bit more towards a bearish week this week, based on not just the chart, the price action today on the chart, but also, these headwinds that are in front of us. Now, again, I trade off of the charts. I make that clear. I'm a technical trader, but as I've mentioned many times before, I look for, when I see something on the chart, I look for triggers or reasons to believe that there could be follow through to what I'm seeing on the chart. And the reason for that is because a lot of what I read on the charts are the candles. Now, the candles are very short-term indicators, like next day, maybe over the next 2 days, but they're very short-term in nature as far as what they're telling us. And so what I tend to look for then is, okay, if I can see a bearish reversal, which is what we're seeing today on the chart, I'm going to show you that here in a second, and I can look ahead and see reasons, possible reasons why that could turn into something bigger, then I can kind of combine those two to make my trade decisions. Now, that trade decision could be to short a stock in this case, or buy a put option, which I prefer. I don't like to short stocks. I prefer buying put options if I believe the stock is going to go down, or if it's bullish, to get into a stock or a call option, or if I'm in a stock and I see some of the stuff, tighten up your trailing stop, or take part of your position off the table. Being able to read that price action can help you make a lot of these decisions that seem to be pretty tough decisions a lot of the time. So that's kind of the reason why I look at some of the macro things that are going on. But we're never going to base, especially since there's so much of this chatter on TV all the time. The CNBC spends all day long talking about macro stuff and why the market is doing what it's doing. And, for the most part, as technical traders, we don't care why it's going up or going down. We just want to make sure we're reading the chart and the price action correctly. But I do know that news does fuel a lot of decisions. And so if you've got some news momentum that could be behind what the chart is showing you, it can give you a little bit of an advantage. So anyway, didn't mean to spin off on that in the beginning, but as far as the direction alerts, we are seeing another problem where the rally is very focused, very narrow. Again, Friday we had this big rally that took place, and what it did was it pushed momentum right back into that extreme range. But Brett is still lagging drastically. So this, again, we know what's causing it, what's doing it. It's the big AI push. I mean, Nvidia went crazy, AMD went crazy. Anything that was associated with AI has gone crazy, and that's it. Everything else is lagging or dropping, and that's why you're seeing the Russell underperform. We'll look at those charts here in a second. The Dow has been down, but you've seen the NASDAQ 100. It's very narrow, and that's not healthy. Now, you can look at it two different ways. You can look at it as, okay, they're jumping ahead, and then everything else is going to follow, and that the breadth will catch up. Or you look at it as this is the final push. It's a very narrow push to a reversal and a sell-off. And again, a lot of it can depend on the context of the chart. And because we have been rallying since the beginning of the year, albeit very choppy and very, very sluggish, with this all coming out, it has a little bit more of a feel of the final push. Now, before you think I'm saying that, a big sell-off is imminent, I've gone back. I started to go back because this AI thing is really bringing up the feelings of the internet bubble. Now that the internet bubble took place very early in my trading career. I've been trading for about 2 years or so when the internet bubble took place. And so it's funny going back and reading some of those journals, early journals. I have to laugh because I was really a rookie trader. I really didn't know a lot compared to what I know now. But what I remember at the time was the market felt like it was extremely overbought in October of 1999, and it felt like that it couldn't go any higher. And that was when the dot-com thing took off, and boy, anything that had dot-com in the name, people were buying. Anything that was associated with the internet, people were buying. There were companies that weren't even companies yet. They were just a business plan, and then they started selling stock for their business plan. And people were buying the stock and bidding it up. They didn't have any product yet. They were just using that money, selling the shares of stock to fuel the start of their company. And it was crazy. And but what I remember is that it kept pushing beyond. It became more overbought, beyond what everyone thought it could do, and it lasted all the way up into April of 2000, when it finally kind of burst. The bubble burst and it collapsed. There were a lot of companies that went out of business. Now, you got to be careful comparing past eras. It's kind of like when we had the regional bank crisis a few months ago. We still are in it, by the way. We're still probably going to hear more about that. It'll come back around again. I don't think it's done yet, but especially if the economy really starts slowing and we do start kind of going into recession, it's gonna expose a lot of companies they're trying to hang on right now, that are in trouble, but they're kind of hiding it, and they're trying to hang on and hope things just improve and they can get over it, and nobody knows how close to disaster they came. But anyway, we were talking about that regional bank crisis. We said it's not quite the same as 2008, but there were a lot of similarities there. One of them was that you had an initial crisis. Everyone said, okay, we got this resolved. It was isolated. It was just Bear Stearns, and that was it. And then it a few months later, it spiraled out of control. So now we're still waiting to see if that is very similar here, that does take place with regional banks, and it comes back around and becomes something bigger later on. But to expect it to be exactly the same, that's not what we're talking about. We just note similarities, because the similarities are based off of human nature. The thing that's repetitive is human nature. It's the way that the crowds behave. It tends to be very predictable. And we're seeing it now with AI, where it's like anything that's associated with AI. In fact, everyone right now is going out and they're looking for any company that is part of the AI infrastructure, and they're jumping in it. And that's why AMD took off, because AMD is a big chip company that might start to have some greater AI exposure. And obviously Google and Microsoft, we've seen those take a run up. There's the ticker, this company that has the ticker symbol AI, which is C3 AI. It's a small company, but because its ticker symbol is AI, it's been just going nuts. And that behavior is what's similar to what happened back then. And the point I'm trying to make is that it looked crazy in October, and it ran all the way until April. So while some of these stocks and some of these things are looking really stretched, we can look at Nvidia here in a second. It could last. It could last a while. And one thing to look for, because one thing that I mentioned a little bit earlier that was characteristic of that era was all these companies that just started sprouting up, these IPOs that started that were just, they had the right buzzwords. AI is the buzzword. So if we start to see that, these new companies coming on board, then now you're really getting into a bubble situation. But for people that are saying the bubble's going to burst right now, I think we're still in the early stages of it. So what does that mean? Is it's related to these stocks? Well, we can ride that momentum, but just be aware that it's going to burst at some point, and when it bursts, it just collapses. I mean, it comes way down. There are some companies, Microsoft, I think, I remember there's Microsoft, there was Yahoo. I remember Yahoo was one that came, when the internet bubble burst, it came down so far that it was nowhere near its all-time high 10 years after, or several years after and then Yahoo ended up. I can't remember if they went private. They're not publicly traded right now, as far as I know, unless they merged with some other company that I'm not aware of. But I think they're private now. They went private, but they never came close to, for years. Microsoft, I think it took like 7 or 8 years before it ever got back to its pre-internet bubble price. And so the point I'm trying to make is you can ride the momentum of it until but when it really starts getting crazy, you'll tend to want to stay away from some of those stocks. As it is, Nvidia is like trading it's like they're trading off of it's like 60 times future sales or something like that. I mean, it's ridiculous. The valuations that these companies are trading at. But anyway, I just remember that the IPOs was the key when all these companies were starting up. And I think that's something to look for, is if you're trying to look for signs of when you might be near the bubble bursting, that'd be something to kind of keep an eye on. But it's not a bad idea to kind of steer clear of it too, especially if you're older and you're dealing with retirement money. If you're going to chase that kind of stuff, you maybe take a very small portion of your portfolio, but you don't want to get crazy with it. And it's hard because your neighbors are going to be talking about it. Oh yeah, I've got this. I own Nvidia, and you'll start to feel drawn in to chase it or stay in it. But it's a typical cycle. The cycle is very predictable. That it'll start out, become a big fad. Everybody will talk about it. That's all everyone will mention, and then you start to hear it. Like I said, you'll start to hear AI being talked about in not in business and stock market arenas, but in just in the grocery store, at the average person that doesn't spend hours a day learning how to trade will be talking about, will think they're an expert in trading because they own Nvidia or Google that has exposure to AI. So we're not there yet, but it is a predictable cycle. But bringing it back here, this is the warning sign, though, is that it's not healthy when the whole focus is on just a handful of stocks. And we talked about this before, and what happened? We got that market pullback. It wasn't big, it wasn't huge, but we got a market pullback when we started to see these signals, and they're showing it that same problem again. And you can see all three. Well, we already know sentiment. In fact, I don't even know why. I may not even pull up sentiment anymore until this even just moves off of that far right side. It's not even worth. It's been stuck there for months, so we know that the sentiment is extreme. But here's where you have all three, and you can see when you have momentum, or excuse me, you have sentiment all the way up here. You have momentum right in here, and you have breadth all the way down here. The last time that happened, it was right in here, and then what happened? We dropped, we sold off. Momentum came crashing back down, but we never saw the breadth catching up to momentum, and we're not seeing it yet here. So, yeah, you can make the argument that, the rest of the stocks are going to follow and they're going to catch up to it, but that's not really what's showing right now. What's showing right now is that those big stocks, that handful of stocks that have been leading the way or holding the market up are likely to come back down. And I'm going to take a look at some of those. Remember last Thursday, I was going to go over a watch list. I forgot to. That's why I started the class late. Is I built this watch list of the big cap tech stocks to start looking at them, watching them, see if they start to roll over, because that'll be a sign that maybe you're getting a bigger market pullback. And we'll take a look at those here as part of our market update class today. Buy sell ratios, they're tight. We're still in this tight range here, not showing any sort of extreme on this. And this other sentiment indicator, though, is right back up with that Friday push. Now, remember, all of this data is based off of Friday's close, because all these indicators update after the market closes. So when the market closes today, and since the market was closed on Monday, they'll update after market closes today. But it shot the sentiment indicator right back up close to that red area. Remember, every time it hits this, you usually get some sort of a pullback, fairly a massive pullback, but it's a warning sign that things are getting stretched, and you might not want to be too long the market at that point. And it's right up against there. So let's take a look at the charts. And what really stands out today, and what I wanted to look at when the market opened was, are we going to get a little bit of a bearish reversal candle? And that's what we're getting. So here's the breakout area right here. We broke out again so we broke out up here. And as soon as we broke out, we got a bearish reversal candle, and then we had this drop right here. And this is what we were seeing, I believe, back then too. I think we were seeing, I can't remember if it was here or here, when we saw the same lineup when the breadth was lagging momentum. And I can't remember exactly. I just remember that it was like within a day or so we had a market pullback. But we saw a breakout again Friday, and then immediately we're seeing a bearish reversal candle. Opened up here, it's trading lower than where it opened, and now the volume hasn't been. It's been a little bit on the lighter side today, and it could just be coming out of a holiday weekend. That happens a lot, so I'm not going to put too much. I would expect to have a little bit lighter volume just based off of the holiday weekend, coming off a holiday weekend. But if it's right up there, if it ends up right up there around Friday's volume or Thursday's volume, that could be a significant reversal. Now, again, these are very short term. These candles are very short term. But this is what I was doing today. Is I said, okay, we got the breakout again on Friday. Bearish reversal candle today. What's going on this week that might lead to either market going higher or going lower? And if the jobs report and if the debt ceiling gets pushed into the weekend, I see that as being negative this week. I don't think the market had a big sell-off. The last debt ceiling argument. It had a big sell-off right before and then it bounced right back. It kind of rallied right afterwards. Now, again, I don't know that the same thing will happen here. Again, looking back in the past, it doesn't always do the same thing again. But I don't expect the sell-off to be as big as it was back then, because I think a lot of people are they kind of know what's likely to happen, the probability. But it's amazing when you get closer to this kind of disaster event. There are people who are going to have to sell just as a precaution, because if the disaster does happen, they can't be caught to where they're going to lose everything, or get wiped out. And so you might see a little bit of selling ahead of that. If it gets worse, I mean, obviously they could vote and get it pushed through this week. But also we want to keep an eye on the VIX, because the VIX should start to tick up, and it hasn't yet. But that I would assume that some of these people are going to be forced to buy protective puts if this thing starts getting closer to the weekend. I just can't. And if they're not, holy cow, could the market be exposed to a massive sell-off if the agreement doesn't get made? And yeah, I don't know. It could really get ugly if they're not protected going into that. It could really be bad. So those are a couple things I'll be watching. Hold on here. Let me get to the market update. So, but again, all I'm kind of looking for is maybe something like we had here. We've got this is kind of a wedge formation that's now forming. I mean, we're getting movement, which is good. This was really bad when we just weren't going anywhere. At least we're still whipsawing, but at least we're getting some movement. But the whole formation here, when you're rallying and it's sluggish, we call that a wedge kind of formation, and it tends to mark the end of a move. And so, you look back and you're saying this kind of fits in that we've been talking about, which is B, wave C, and we have marked that it might rally up to this area right here, and that's still a possibility. But especially if it rallies up to that area like it's been, where it's choppy like this. So maybe it comes back down into here, and then it barely goes higher up to here, and then back down. That is a bearish type behavior. Again, it still doesn't mean we can predict what's going to happen next, but my job is to point out the price action, the patterns that are kind of forming, and that's a bearish type of formation. Now, can you find charts that act like this and then suddenly they take off? Yeah, and if it does, like I said, I do. But it's not the behavior we're seeing right now, so we're going to still remain a little bit cautious. The Dow, again, it's been dropping. Now it's still in this area here. Let's back out to a one-year chart, because I want to make sure I haven't missed this. And if you think I'm taking one side where I'm bearish and just being bearish, no, I'm noticing that this could be an inverse head and shoulders pattern. You have this is corrective, and usually the left shoulder and the right shoulder will line up in about the same spot. And with that drop last week, the low last week, it basically meets that criteria. Now the strong signals, if it can break above the neckline right up here, which we wouldn't get that confirmation for a while. But keep in mind that if every head and shoulders pattern worked, or inverse head and shoulders pattern worked, that's all we would trade. We'd never trade anything else. We'd always be right. What would be a signal that bullish formation is breaking down? Well, if you start getting closer, you shouldn't be close to the head down here. Now, this could go a little bit lower than the left shoulder, but I would say, boy, if it got past this point right here, then now you're too close to the bottom of the head there, and that would make it less likely that it's an inverse head and shoulders pattern. And also, what you want to see on the right side of an inverse head and shoulders pattern is you'd like to see a little bit of a higher low than the left side. You want to see it showing more buying strength than it did at this point right here. I don't want to see it go lower. So any move lower than this low right here would not be great. Okay, doesn't mean it's very great. Okay. Now, on the other hand, if it starts to take off in a more of an impulsive move, and it should be more impulsive out of this. If this is impulsive, this is corrective. It should start taking off if it's a good strong inverse head and shoulders pattern. If we don't see that, that's another thing to kind of keep an eye on. But as of right now, as it is with the S&P just broke out again. Like I said, has a bearish reversal candle today, but that's very short term. Could it turn around and rally back up? Yeah, absolutely. So we're going to watch for that this week. I think there's a lot of headwinds this week for that to happen, but like I said, if they get an agreement done before Friday, I could see the S&P rallying off of that news. Well, at least I don't know. Jobs report could offset that, but then again, maybe the view the jobs report is bullish as well, and you have another fight like we did last week. We'll see, but. I'm a little bit more cautious than that. Here's the cues. Again, you've got a far right side of the extreme reversal risk, and you've got a bearish reversal candle today. Again, that doesn't mean it's going to come all the way back down. Usually when you see something like that, it's either going to move sideways for a little bit. Moving sideways could alleviate that overbought condition, or it's going to pull back a little bit. Sometimes when it pulls back, it can pull back pretty sharply. The last breakout area was right in here, so it could pull back to that. Here's the Russell, which has been lagging everything, lagging the move. And we talked about recently how maybe this is a bearish ABC pattern right here that might have completed, correcting this move down. It rallied on Friday, but again, in comparison to the other index, it didn't rally very strongly. And then again, immediately a bearish reversal candle today. That underperformance is still something that's bothered me. Typically, the Russell 2000 is leading. It's not following, or it should be leading the way. And in this case, is it leading the way down? Obviously, if the NASDAQ 100 started to sell off, I mean, all of these would drop most likely, just because those are the stocks that have been holding everything up. Bonds have rallied the last couple trading sessions here, but we're still right at this low. And let's back out a little bit so we can see. I've talked about this. If it breaks below that low, I think you're going to move down towards these lows down here. So the fact that we've had a pretty good rally the last couple of days is a lot more bullish for bonds, and it might be working its way back up towards the highs up here. Gold has pulled back recently. I do want to point out this. I'm going to stay there's a trend line right through here it's kind of bouncing. Looks like it's bouncing off it a little bit. If it breaks that, it wouldn't be very good for gold. But I've mentioned the long-term trend, very long-term trend looks bullish, very bullish. Let's zoom in a little bit on the near-term price action. Kind of an indecision candle today, although it's closing. It should close higher than it did on Friday, which would be a little bit of a short-term bullish signal. Although with an indecision candle, at least if that's the way it closes right now, obviously we have time left. You could make the argument that this is maybe wave A, wave B, wave C of a correction. But it could be also that, especially since this went a little bit higher than that this is just the start of a correction, wave A, wave B, wave C, and it comes down a lot further. If it does that, it will break that trend line. I think a lot of this is going to have to do with the dollar, the movement of the dollar. Dollar's getting a little stretched, so I wouldn't be surprised to see gold and other commodities rally a little bit in the near term if the dollar pulls back. Let me skip ahead to the dollar real quick. You can see it's getting close to that extreme reversal risk. Now there's a resistance area up here a little bit higher, so I think it could still rally a little bit more into here, but I think it's going to have trouble breaking out of that from this condition where it's already a little bit stretched. It might, but I still think the trend is behaviors pulling back or moving sideways could be a little bit more bullish for commodities like gold. Oil had a big drop. Now we were kind of expecting this. We were looking at this as a little bearish ABC pattern right here. I talked about this on Thursday. It had started to move down on Thursday. Friday it tried to rally a little bit, and then big move down here. This is suggesting it should continue to work probably towards these lows down here, but it still looks bearish, at least in the way it's behaving here in the last couple weeks or so. And I think I think the jobs report Friday will be big for oil, because oil's again very. I think oil's been down in anticipation of the economy slowing down and possible recession. And if we get any stronger indication of that taking place, then obviously I think that's going to affect demand for oil. But again, oil can be tricky because it can rally or drop on a number of different things, and OPEC could come out with some news and it could cause oil to move dramatically one way or the other. All right, we looked at the dollar, VIX. The VIX came back down again. It was up around here, beginning of class. See, the VIX is so low. It's still, again, it's not even, it should be above, I can't believe it's not above 20 with this whole debt ceiling argument. And if it's not above 20 as we get into the weekend, if you get into Friday and there's not an agreement, hasn't been voted to increase the debt ceiling, man, that could be crazy. And I don't know. This has baffled me for a while now. How volatility has remained this low, and usually it like I said, for me, it's a feeling of a happen when you start to see these things kind of line up. But I've talked about that for pretty much the whole time we've been down, the last couple months down below 20, and haven't seen it yet. So, but if it does happen, we can look back and say these were the signals, and hopefully it becomes part of your learning process where you can recognize some of these things and see them coming in the future. And again, it's not that we have to predict when a drop's going to happen. But if you start to see these and you're loaded up in your portfolio, you can tighten stops. You can start to go to cash, sell some of your positions to build your cash reserves in case there's a big drop. The problem is that people think that they're going to be able to recognize that a drop is underway and be able to get out without too much damage. But I mean, boy, if you ever experienced a panic sell-off, it could wipe out 2 months worth of a rally in 1 hour, or 1 day. And by the time you're like, hey, we're in it, it's too late. You just gave back all the profits you made for 3 or 4 months. So my thought process is when I start seeing these signals is I'd rather miss the last dollar or two than give up the last $5 or $6, right? But human nature, believe me, it's weird. I can't explain it, but people often get more upset with a missed gain than they do with a loss. Meaning, if they got out too soon, the stock went up another $10. They're more upset with that than if the stock went down $10 before they got out and they lost $10. It's a weird part of human nature I've never been able to understand, but you need to recognize that, because that's what's crazy, is that's why things will tend to get to the point where they break and everyone sells at the same time, because everyone's so concerned with not missing that last dollar that they'd rather they're not going to get as upset if they get a $5 loss. It's crazy, but that's kind of the way we think sometimes. You have to kind of fight that, but that's why it's important to recognize these signals so you can take profits off the table, get more to cash, and then if you're wrong and it does keep charging forward, you can always get back in. But it's much easier to get back in when things are moving more slowly on the way up than trying to get out when everyone's getting out at the same time and things are dropping dramatically on the way down. So, all right. I was going to take a look at the volume, the SPY volume. Yeah, we're moving in the last hour. It's still pretty light volume. Now, the last hour is the heaviest volume of the day. And so we're going to get close to where it's been, but it still looks like it's going to be lighter than it's been the last few trading sessions. Again, it could just be the holiday week or holiday coming out the holiday, but usually I like to see a reversal on a little bit higher than average volume. Back here on this reversal, you can see that was this volume bar right here. All right, so we'll keep an eye on that. Chip stocks, again, you got the bearish reversal candle here. They went parabolic. That's almost all NVIDIA. Well, it's not entirely NVIDIA and AMD. Micron had a pretty strong move. And this is what's funny, is because this is why you have to recognize that sectors will move. And in some cases, it doesn't make any sense at all. The reason why people are piling into NVIDIA is because it's the primary AI chip, right? And AMD, I think, has some exposure to AI as well. But there were chips companies that were rallying strongly that have no exposure to AI. Their chips are in some other products, and yet they're rallying along with the group, because that's what happens, is money flows into the whole sector, whether or not it deserves to be in some stocks or not. So you got to recognize that dynamic, because that you could say this makes absolutely no sense, and yet that's the market for you. If it goes into one stock in one sector, it tends to flow into other stocks within that sector as well. Good or sometimes that's good for you, sometimes that's bad. But we're seeing that parabolic move, bearish reversal candle. Wouldn't be surprised to see a little bit of a pullback. Now, sometimes on this strong of a move, you get a bearish reversal candle, and it may still try to fight to go higher. I'm not saying it has to pull back immediately off of this, but usually it's a sign that within a few days you should see some sort of a pullback off of that type of, again, parabolic, straight up, bearish reversal candle. Maybe it fights to go a little bit higher, but that's usually the warning sign that that the buyers are drying up, because that's what happened. It opened higher, and the buyers have not been able to push it higher. The sellers have been able to close it lower. At least as of right now, we're assuming that they're going to close it lower for the day, still higher than the day before possibly. So it'll look like it's up for the day. If all you're looking at is saying, hey, what's wrong? We're up almost 1%. That's good. That's positive. Yeah, but you're not seeing the whole picture. You're not seeing that momentum shift that's taking place today, where the sellers are likely to close this thing lower than where it opened, and they're showing that they're gaining momentum and could start to push that price down over the next few days. Let's look at Bitcoin here. Talked about this being a little bit of a possible bullish ABC pattern. Now, Bitcoin itself, I think, rallied pretty strong on Sunday. Yeah, I had that really. The one we're looking at there is a stock that mirrors Bitcoin. It doesn't mirror it perfectly, but Bitcoin had a pretty strong move on Sunday, and could be starting to move out of this. We've been looking at this as being an ABC correction right here, and here was kind of the breakout area. So it broke out, came back, retested the breakout area. It looks like it's getting ready to take off again. And this is not in a bad position here, where you could put a stop below that breakout area and see if it starts taking off. Starting to look a lot more bullish there. All right, real quickly here, let's take a look at I made a watch list of the mega cap tech stocks. You can see right here. And I might have missed a few. I was doing this right before class last Thursday, and so I didn't look at this before class to see if I'd missed a couple of stocks that should be in there, but I think I got most of them. But we look at NVIDIA. NVIDIA today has a bearish reversal candle. This is a shooting star, one of my favorite bearish reversal candles, because what happened today is we opened higher. Here's where we closed on Friday. We opened higher. Buyers pushed it up immediately, and then sellers have pushed it all the way back down, and now it's below where it opened. Again, it's still showing it's up 3%. And so all everyone's going to talk about is NVIDIA's up today, and it just keeps going up, and you should be in it. And who cares if it's gone up so much in a short period of time? You need to be in this, and this is telling us, well, you could probably get it at a cheaper price if you wait a little bit, because it's probably going to pull back. Maybe not much. I have a feeling that on any pullback, there's going to be people buying the dip on NVIDIA for a while. So, but I wouldn't chase it here with what it's showing. It's showing it's getting a little stretched there. Well, it's showing the bearish reversal candle today. Microsoft, same thing. Had a big strong day on Friday, bearish reversal candle day, getting into the extreme reversal risk. And again, this is they're kind of the leaders of as far as the big companies. They're kind of the leaders of the AI movement. They've kind of surpassed Google right now. Apple, they're not the big buzzword of AI, but the Apple has AI. Siri is an AI function. And so they've had that technology on their phones for a long time. So it's not like they're probably out there developing more of that type of stuff with their products. Now they are trading higher than where they open, although off the highs of the day. Not as strong a bearish reversal as the others, but we'll see how that looks at the close. That could change. AMD, again, parabolic move, bearish reversal candle right here. It opened up here. It's trading down here, and it is trading lower than where it closed on Friday. Wouldn't be surprised. It's again far right side of the extreme reversal risk. Now we might need a little bit more confirmation than this. It's just a one-day reversal, but this is one of the reasons why I'm leaning a little bit more bearish for the week. Is this is what's been holding the market up, and if these stocks are looking like they can pull back, and maybe all I do is pull back a little bit over the next couple of days, that still means the market is probably going to pull back. I don't know what else would hold it up. Google, bearish reversal candle. Now it's been moving a little bit sideways here, but a little bit of a bearish reversal candle today. Amazon, same thing. This is what we call a hanging man candle formation, where it looks like it's hanging from the gallows up here. Not the strongest bearish reversal, although it is a bearish reversal candle. But that's, again, the fact that it's still a bearish reversal candle lining up with all these others. Tesla, more of just an indecision candle, spinning top, not a real strong, but you're at the far right side of that extreme reversal risk. Netflix, big move up today, but again, kind of a bearish reversal. It's trading lower than where it opened, although off the lows of the day, but that's still, and it's, again, all of these, extreme reversal risk. The reason why we have those indicators is they tell you when things are stretched, and they're definitely stretched, some of these names. Meta, it's kind of a spinning top candle formation, not a strong bearish reversal, and it's not the far right side of that extreme reversal risk. And I don't know, again, I mean, it's kind of related to the metaverse, which I'm sure will involve a lot of AI technology, but I don't know how strong it is exposed to that right now. But yeah, so all of these that are in that list I've got over so far, pretty stretched. And the one I told you I might want is the C3 AI. AI is the ticker symbol on that one. I mean, look at that thing. It's, from what I've been told, I don't know much about the company, but I've been told that they're not making any money or anything like that. But did they hit the jackpot by having the ticker symbol AI and being an AI company. And you could see it. They were they're $17 company earlier this month, and now they're pushing 40. And I think they have their earnings coming out this week. And I wouldn't be surprised if it did like an NVIDIA thing where it's like, yeah, we're not making any money and our valuation is already stretched, but this is what we think we're going to do over the next few quarters, and the stock will maybe go nuts or something off that, or it collapses. That's the thing. I don't want to play earning announcements because, but I wouldn't, if I could get a decent pullback on something like this, this would be, it's a growing company. It's probably going to keep growing. You're coming out of this kind of bowl-shaped move right here. Impulsive up. This is kind of corrective. I just wouldn't want to buy it right there. But like I said, I'm not saying stay away completely from AI. They're going to have a run, and they're just getting started. But it's just buying in right at these extreme ranges. I just can't get myself to do it. And especially with the market conditions were different. If it really looked like we were done with the bear market and coming out of a recession or what have you, I'd have no problem taking a chance and even chasing a little bit. But I think that we're likely to get a better entry point at some point. But it is a 98 strength rank. Just a little bit stretched here in the near term. All right. As far as some individual stocks, take a look at the I don't know why my TradersPro tends to always freeze up right at the end of class. There we go. All right, on the new buy list, I like this top one here, JFIN. Seems to be coming out of a back right here. I like the trend, holding the trend line right there, and it's a strong up day with the market kind of being, down a little bit or showing that mixed condition there. Back out a little bit, check the long-term chart. Yeah, so it's kind of in this, holding this range right here. As long as it trades within that range, that might mean that they're getting closer to the top of the trend line right there. Would have liked, if I would have seen this, it would have been a better entry if I saw this on Friday. But I like that chart at least. Another one is this ADMA. And looks like it's coming out of a ABC pattern right here. And I like the longer term chart of this, if I remember right. Yeah, because it looks like it's got kind of that bull move and you're kind of broken out. You broke out above the bull. Now, a cup with handle formation is usually, it'll come up to the top of the bull here to move. It'll correct right here. The other thing you look for is if it doesn't correct along the top of the bowl, you look for it to break out above the bowl and then come back to it. And then that's what it's kind of done right here. But this is also why I don't like to chase the move. If it comes from a lower area here and goes straight up and breaks out, doesn't hesitate at that breakout area, I don't like to buy those breakouts because in almost every case they're going to come back down and retest the breakout. If I do want to buy the breakout, then I want to see it run up to the breakout area and then consolidate a little bit, correct a little bit, pull back a little bit, whatever. And then when it breaks out, there's usually more room for it to take off at that point. So if you're looking at how to trade breakouts, that's kind of my philosophy is if it's on or already impulsive move breaking through that, I usually wait to see if it comes back and pulls back and test that. Now, I'm going to go ahead and add this one to the portfolio because I can put my stop. I like that pullback pattern, and I can put my stop down here below that breakout area. I'm going to put it down at $3.75. Not risking very much. It does have a little bit of a indecision candle today after Friday's strong move, and again, market conditions are a little bit more bearish. But I've held the SARK as a hedge in case things pull back a little bit. And it was showing a little bit of a bullish reversal candle today, although it's a little bit off the highs here. So if this one does drop, I should make it up for with the SARK. Should go up and value and offset that a little bit. But I'm trying to add. I told you I'm going to take a little bit of a risk here, try to add some things so that we've just been going a long time without doing anything in the portfolio. And I know people have been waiting, but on the flip side, I don't want to do a whole bunch. And then, the whole purpose of being patient was to not have a big drawdown. And, when we finally bottomed out. So I told you, I think it was either last class or the one before that, I'm willing to risk down to 130,000, excuse me. So I'm willing to risk about 6,000 of that in some trades. And in this case, I think we're kind of offset with that hedge with the SARK. I think we're okay there. We wouldn't get beat up too bad if we're wrong on this. But I like the buy. I've seen a lot of these just really taken off, and they've been outperforming the market. Even when the market's been pulling back, they've been holding up pretty well and still going higher. So I'm going to take a chance on this one. Let's add it. The portfolio here. Stop is at $3.75. We get about 2,000 shares. Well, let's see what the risk is. Only $560 risk if we're wrong. Perfect. Go ahead and purchase that. All right, and then another one I liked in that list was this KDNY 96 strength rank. Another kind of biotech, pharmaceutical type stock, but this one inverse head and shoulders pattern, and it's kind of breaking out the neckline today. Let's add that one too. We'll put a stop down below the right shoulder over here, about $21. Let's see what the low there is. 20. Actually, let's put it about $20.50. Do 350 shares. Let's see what the risk is. And we're still within our. I want the percentage to be no more than 1.5% of the total portfolio, but it would be a $1,200 loss if we're wrong. So you have to be okay with the actual dollar amount of that. I'm okay with it, but if that's an issue, if you're looking at that, you might have, then just do half that. If you can handle $600, then you buy 150 shares or something instead of 350 or whatever. You can lower that down a little bit by adjusting the number of shares to get that risk amount down to where you could handle. And then the last one here was this NAT, the shipping company, but it just looked like it could be starting to move up the right side of the bowl. You had lower highs and lower lows through here. And then you had this move up that puts you to a higher high. And then this looks like a little bit of an ABC, although I'd want some confirmation it's starting to move back up. Down day to day, I'd wait on this to see if it can start moving back up and give you that higher low. But this is one you could keep an eye on. If it keeps dropping, then, just, you never got in, you never got confirmation, move on, go look at something else. But if it can start rallying right there, that's the I like that type of formation where it looks like it's early in reversing from a downtrend into an uptrend, and it's starting to act like an uptrend with higher high, possibly higher low right there. All right, that's it. Portfolio. Let's just check on gold. We already looked at the gold chart. It's holding up. I haven't been stopped out of that one yet. I did get stopped out of silver. And then the SARK, I mentioned at this should go up if the market goes down. And so that's kind of my hedge right there, but it had a little bit of a bullish reversal candle. It's the opposite of the ARKK. And this is the ARK Innovation Fund. Big holdings are in Tesla and Shopify and Coinbase and some of these innovative funds. Square has a little bit of a bearish candle today. And then you look at, I always look at by the way, this is a way to trade Tesla. It almost mirrors Tesla. But Tesla had a little bit of an indecision candle today. We'll see if that leads to a little bit of a pullback, and it's in that extreme reversal risk range. So that's another reason to hold on to that ARKK for the short term, or the SARK, excuse me, SARK. All right, that's all I have. If you have any questions on anything that I didn't cover today, or if you're viewing the recording, just send those to Jerry at TradersPro.com. I'll be happy to answer those for you. All right, we'll see you on Thursday for the next class, the stock specific class. Have a good week, everyone. Bye now.